Today is May 1, 11:40 a.m. We detected unusual options on Uber. And this is actually the last day to trade earnings for Uber because they report earnings tomorrow morning. And you'll see that today it has rallied up. And so we are currently sitting at $32.42. And so in this video, we are going to go over the unusual options for today, the last day of the earnings trade. And then number two, we're going to analyze what they mean. And then finally, we will show you what our trades are for this earnings. And we are also going to follow up on the unusual options we saw yesterday on Uber. So let's get right to it. So for today, we saw these 39 strike calls. Okay, so you see lots of this coming in at 10:50. This was just less than 1 hour ago. So if you don't have that bell icon turned on to get notified, that's really important so that we can update everybody whenever we see these things coming in. This one was this 39 strike call. So if we look at it here on the May 19th, you will see there are 52,000 currently at the volume here. So much less than this open interest. These are opening orders. They are selling the 30 strike calls. So they don't think it's going to break $39. And that is most likely not going to happen. It is a very small probability of a 7 delta. And so this could also be a large institution with a bunch of shares on Uber and selling covered calls to take advantage of this volatility to collect some premium because it is currently quite high right before earnings. Okay, and anything else we see here is also this May 5 here. This one expires this week, so this is an earnings one. This one's selling the 34 strike call, so this is also possibly selling a covered call as well. But this one is more risky because it's closer. The probability is 33, delta 33, you'll see here. So this is another indication that this strong bullishness of Uber may not continue after earnings. It's actually now at 3.9, dropped below 4% when we started this video. So, and you also see it was up to here this morning, all the way up here, which was about 32.89, so almost $33, but didn't quite make $33. So that resistance there kept that down. So keep that in mind. And as we look at these other strikes, you'll see here that today's another one, the biggest today's was a 32.5 puts here, right? 500 of them here, done at the ask price here. Actually more than that. It's higher than the ask price because the ask price was at 1.44. So a little bit more aggressive in the buying of the 32.5 strikes. You'll see that over here, right there. Volume greater than the open interest. And so that's also a short, obviously buying those puts. So this agrees with our analysis yesterday when we were looking at Uber. If you remember from our video yesterday, let's put that up on a link at the top here. We also made an Uber video on that. We'll also put it at the end of the video. If you have info cards turned on, it'll show up here at the top right corner. We were also looking at this trade here. And here yesterday, we were looking at these 27 strikes here. and the 28 strikes here. And we were looking at it because it was a ratio. You'll see here that the open interest is 21,000, and then for the 28 was 11,000, a ratio of 1 to 2. So there was a back ratio spread here yesterday. So this agrees with this trade that they did on Friday, and over the weekend we were analyzing this. So because of these reasons, this bearish trades, we also went bearish, and we are shorting it. And the way we are doing it is a little different though. And so this is what we're doing. We're selling the 32.5 strikes for the May 5s, just 4 days away. You'll see here our position. You also see that the volatility here, implied vol 101, extrinsic value here, 1.33. Okay, so keep that in mind, because when we want to put on our trades, we tend to like to reduce our overall extrinsic value, because extrinsic value is basically the cost of options. And so if we can reduce that cost of the option, that's puts us at an advantage. So when we sell this extrinsic value at 1.3, we want to make sure sometimes that we're buying another option that is not going to end up with a net extrinsic value. So what we did here was we bought this one here with just one extrinsic value. That means the net, our net is still, we're a net negative because we sold that one. That was and this one we're buying it, so we're actually not going to be taking on any extrinsic value because we're buying less intrinsic value and selling for more. And that's why we also chose the 34 strikes. And so you see our position here. And so also the volatility is less, 47%, much less than the one we sold, because we want to sell higher volatility, get better premiums, and then buy at lower implied volatilities in relation to that. And so when we did this trade, currently it's going for 124, you'll see here. And as we analyze this trade, you'll see that it is a bearish diagonal trade. Currently, Uber is sitting at 32.4. And as the price goes down, it will gain because we are above this zero profit loss on the y-axis. And so if you notice this trade, the break even at expiration on May 5 is actually above the current price. So over here, this is our break even. As it expires and gets closer to May 5, this is what the trade will look like. So our break even is sitting right here at about $35. So as long as Uber at the end of May 5 is below $35, this trade will be profitable. You'll see that everything above that is above that zero from this 35 line. And so where is $35? Well, let's take a look. $35. It's all the way up here, $35. So this is the next resistance point. So we have a pretty good here, a pretty good probability that it won't break through two resistances, because it has to break through this one and this $33 one that it couldn't break this morning. So this is why we put on this trade. It has a higher probability of success, of profitability, and so we like this, and we like how it is selling a higher volatility and buying a smaller volatility. So this diagonal trade, it has a high theta, you'll see here. Also, well, actually, no, sorry. We have to drop that down back to today, and you'll see the high theta, right? As it approaches the expiration, the theta starts to not be as beneficial anymore, and you'll see that start to change through time, right? And then once it expires, it will be a negative because the trade is basically over at expiration, right? So that's why it shows negative, but once, as we get very close, it's actually a very high theta as we approach expiration. Theta is usually very high at that point. Okay, so this is our trade, and hope you learned something. If you did, please smash that like button and comment below on what you think about Uber. I'm very curious to know what everybody thinks about this trade. And subscribe if you haven't, and smash that like button as usual. Take care, everybody, and good luck.